Alright, Alpha fam, let's do a quick market update. Before we begin, I do want to say that nothing in these videos are financial advice. Everything's for educational purposes only. This is just my own analysis on the market. Also, if you're new to this channel, if you can please like, comment, and subscribe, we really do appreciate all of this support. So let's get into the market, guys. So today is a pivotal day, alright? I think everybody is kind of just sitting on their hands, waiting to see what happens with the FOMC. I was actually not going to make this video until later this afternoon because I wanted to react afterwards. And what I'll probably do is I will post another update later in the afternoon just over my own thoughts on Jerome Powell, the speech, what he says, obviously the Fed's decision for rate cuts. And I'm going to be honest with you guys. I am a little surprised that we're not dumping into this event. Typically, we de-risk going into these FOMCs, so this is something that is a little unusual, and it's making me think maybe they wanted to try to sweep up some liquidity at the top before they know what's going to happen today, which is we could have a chance, guys. There could be a negative reaction depending on what Jerome Powell says based upon Trump's recent actions with the tariffs and stuff. This is also Jerome Powell's first time having any type of speech since he's being sued right now. He's got a case where they're suing him. This is interesting dynamic. Both of these things kind of converging together. Taking a step back and just looking at the market objectively, things, if you were to remove the FOMC, actually don't look bad right now. Like, we've reclaimed some key levels. We're back above 90,000. We reclaimed a 50 on the 4-hour. And you can actually see for this last week how crucial after we made this move down was. This was back on Sunday on the 18th when that futures opened last week. You can see how this hourly has just been really hammering as as resistance. And now we finally have broken above it, and you've used it as support. So then what you do is obviously come into the 2-hour. You can see it there. We've broken above, used it as support. The 2-hour is really resistance, guys, and we've broken above it. And then you can see on the 3-hour, same. All right. With that being said, guys, and again, because we're at a crucial level, I am hoping today goes really, really well. Obviously, nobody can predict what Jerome Powell is going to talk about. But what we can do is this. We can look at some independent data readings prior to get us a general read on some of the things that we can expect. One thing right now, guys, that nobody can deny is inflation is extremely low. All right. So the Fed, and we've talked about this hundreds of times, guys, the Fed's general read, or the way that they make decisions on interest rates, are when inflation is as close to the 2% goal as possible, and with a uptick in unemployment. All right, so this is the reason why we had just got the two rate cuts, because we had inflation was lowering, and then unemployment was going up. All right, now that they have stabilized the unemployment, this is a big reason why nobody thinks that we're going to get rate cuts today, including myself. I don't think we're going to get rate cuts. You can obviously see on Polymarket, we're definitely not pricing in rate cuts. Of course, if we were to get a surprise rate cut today, the market would go absolutely nuclear, but don't count on that, guys. We've got a 99.6% chance of no change today, and I don't think they do it because they're going to, again, especially with the recent tariff stuff, we've seen the playbook before with the Fed. Whenever there's a lot of macro uncertainty that comes out, it causes the Fed to freeze. So I also kind of think that maybe the reason why Trump has ebbed and flowed this trade war, where he was like really aggressive last year, they kind of like let off the gas, let a lot of trade deals come, because he knows that the Fed won't cut rates when that happens. But then Trump also knows Jerome Powell's being replaced in a few months. So here soon, he doesn't have to worry about it. He's going to have his guy in the Fed who he's going to be pushing to get those rates lowered, guys. So this is a big bullish catalyst that I'm looking forward to in the next few months to cause this market to really accelerate. I think there's going to be a compound of a few things, but Jerome Powell being replaced is one of them. And then obviously one thing that I'm also concerned about right now, guys, especially this week, there's still an 80% chance of a government shutdown. Last time we got a government shutdown, the market didn't nuke immediately. It took a little bit of time to fall off. And the reason why is because the liquidity dries up, guys. You forget that even things like food stamps, and as stupid as some people might think this is, those people that get those food stamps, guys, they go spend that money in their local grocery stores. Those local grocery stores then takes that money and then pays their employees, and then this is a big funnel and a big circle. This money eventually finds its way into the market. All right, seriously, this is how things like this work. And when you remove the liquidity, especially the government's ability to fund things in a very short period of time, you start seeing the liquidity soak up. All right. With all that being said, guys, watching these things extremely close. Looking at Bitcoin from a charting perspective, again, we've been talking about this, guys, with the Wyckoff right now, and it's funny, Marty Party's saying it too. I'm trying to figure out which one are they going to do. All right, are they going to be able to complete the spring? And to me, and my thought process is, if they get a government shutdown, and then we get a really hawkish Fed Powell, we could obviously quickly see a spring occur where we get this quick deviation underneath of this trading range, where obviously the next region would be somewhere in this general box down here, and then from there, and you can see how this thing kind of just hit right on it, and I think it would deviate just a little bit lower. I would be honestly targeting, and I would put, obviously there's a few ways for me to look for the level that I think would hold. The first thing I'd obviously do is put on a Fibonacci. I'd be looking on the Fib to look for any other levels. And obviously, guys, I don't want it to break. Nobody wants it to break below 70. I think it would, generally speaking, somewhere between the 80 and 75,000, I think is where the wick would find support. And then I think it would be at a very aggressive push to the upside. And I think we would be there for maybe a day. Like, we would be there, we would get in there, get out. You know what I mean? It would be something very similar to like what we did over here on August 5th with the Japan carry trade, when they did the spring for this, and this was signaled the final local bottom, which actually was the precursor, what actually led to the next uptick or the next run. And I remember that time during August 5th of 2024, you heard the same thing. It's over. No more bull run. It's been canceled. Everything's going to zero. Bitcoin's going to 20,000. You heard all the same stuff then. And what happened? A month later, nobody remembered it. Seriously, it's how these things work, guys. So, if we do something similar to this, or even something similar to this, and they do want to do this crazy wick down real quick, like I said, I think it'll be very quick. I think we'll come deviate. Let's say we reject today, and then we start the move down, we wick, and then we immediately move up, and we start the next uptrend, guys. Remember, even though this could be a scary event, and it's going to scare a lot of people, it's getting actually prepared for a bullish set of circumstances that follow suit, guys. And you can see what I'm talking about right here. This is the Wyckoff logic, all right? And remember, guys, these markets are created in four different zones. You've got your accumulation, uptrend, distro, downtrend. And then in those zones, there's characteristics and things that you're looking for in order to tell if you're actually leaving the accumulation, if you're still in the downtrend, if you're getting ready for the markup. And what I think we're getting ready for, guys, you can see this low volume failed sell-off right here, where we deviate outside of this trading range after we've established it. And you can see how this was the selling climax, the spring, and then this is how we created the trading range. This right here, guys, is what I think they could be trying to prepare to set us up for. All right. And again, this is meant to scare retail. It's made to cause panic. And more than anything, it's made to sweep liquidity, guys. It's made to knock out longs. That's what it's there for. But this is also the best R&R that you can get in the markets. I'll give you an example of one that I just caught last time when we had the last move. Athena. Identified Athena when it was doing its spring. Bought in on its retest. I think it was like 22 cents. And it went on to do a 3x. It went up to like 80-something cents. This was just a few months ago. All right. These are the characteristics you're looking for in order to try to get the best entries possible. These are also the best DCA opportunities as well. I tell people you're probably not going to catch it, so we'll go back to what I always tell people. Utilize limit orders. That's why they're there. You'd be surprised if some of these things get filled, guys. I had some guys get some crazy limit orders filled on Curve in Athena when that last FUD event on October 10th happened, and Binance sent that crazy wick all the way down. And these are the ways that you are absolutely able to make the most money in these markets, guys. This is how you take advantage of this. This is how you are able to operate. And this is when smart money accumulate, guys. Follow the smart money. That's what you have to do. You have to follow the institutions and what the smart money's doing. They're the ones that control these markets. Straight up. Them, the exchanges and market makers, are all working in cahoots to create these markets. And retail gets stuck in the middle and they get wish-washed both ways. You don't want to be stuck in the middle, constantly kind of feeling like you're chasing your tail, guys. I'm telling you, this is very important because this year, 2026, guys, is gearing up, I think, going to be a very bullish year, and then it could potentially turn into a very negative, bearish year by the end of it. All right? There is a lot of things that people are watching right now, including myself, that are just really have gone way over where I thought they would, including the metal trades. All right? Metal trades have come down, have gone up significantly. You got silver at 113. You've got gold at 52.59. These are really, really high valuations for these things. I'm not saying that I'm calling a top on them. I'm not saying anything like that. I'm just the FOMO that's kind of come in behind the metals trade. All right. These type of things aren't typically sustainable for long term. I'm not saying that these things have to top today. I'm not saying they can't continue to expand a little bit further. Euphoria is euphoria. These things can carry on for a bit of time. But I think, especially for guys that are in crypto, people want to see this kind of unravel a little bit because it's definitely taking up and soaking up a lot of liquidity. It's taking up a lot of light. You got people that are pivoting from crypto going over. But guys, this is the reason why they're called catch-up trades, all right? Crypto is all the way down the risk curve, guys. It's the risk-on assets. It is the riskiest asset there is. So everything else has to line up in order for the conditions to meet for crypto to run. Everything else will get a bid first before crypto because they don't need the same type of conditions that crypto needs in order for that risk-on environment. Always remember that, guys. So with that being said, I'm watching these things pretty closely. A couple of things that were interesting was that we finally, Bitcoin dominance, you can see it found a little bit of support at the 50. Even though on the weekly, we've got this rejection. We definitely don't want to break above this, so I'm watching this pretty closely. We've got USDT dominance. We're watching this. This thing is starting to break down. What we want to see is obviously get back below this 50-day. What this kind of looks like to me, guys, is like the start of a head and shoulders pattern. Like this is the head, this is a shoulder, this is a shoulder, this is the neckline, and then this thing will kind of break down because as this comes down, this does look like a potential neck and shoulder pattern. We're expecting, and again, there is a chance, guys, for there to be some volatility over the next couple of days. This thing might also want to do the opposite and spike back up before making that rollover because of what today is, and then going into the government shutdown. These are things that we have to kind of keep in the back of our mind. Just because the market looks really good now, because we do have these events coming up, you want to be cautious. All right. I know some people that I respect in this market that are currently shorting right now. All right. They're scalpers. They're not shorting because they think the market's going to zero, but they think in the intermediate time frame, because of these macro uncertainties, there could be an opportunity for us to get a sharp wick down, complete the spring, and there was people trying to take advantage of that as well. You got people that play both sides of these trades, guys. Always remember this. With that being said, guys, I'm going to be watching things pretty closely. We do have both the futures and NASDAQ are looking pretty good right now. We did get futures did break into a new all-time high yesterday. You got NASDAQ that is attempting to try to make a new all-time high. It's not quite there yet, but I think it's going to be there soon. You've got S&P 500 that did make new all-time highs yesterday. You've also got a lot of this stuff that's been green for like I think the S&P 500 has been green, I think it's 9 months in a row, guys. Like, you got 1, 2, 3, 4, 5, 6. This was a little red. Basically 9 months in a row. I mean, that's insane, all right? It's insane, all right? With that, you have all these things that are just kind of floating at all-time highs, guys. I mean, especially if the stock market decided to go on like a 10 or 15% corrective, that would be really bad for crypto. All right, especially with it already being at a critical level. We need this catch-up trade to start happening in some of these other markets to kind of not, saying that we don't want them to dump, but just kind of start chopping sideways a little bit and cool off so we can get and catch a bid over there with the crypto. hopefully, though, guys, I think things are still lining up for 2026 to be a really good year. We are obviously transitioning from 2025 into 2026. These things take a little bit of time. First FOMC meeting of the year. We've got a lot of things gearing up. We really want this government shutdown thing to blow past. We want them to make a deal. No government shutdown. That would be extremely good. Jerome Powell coming out dovish, optimistic, not hawkish, very, happy, not being a fucking dickhead. As long as we can get him to do that, part of my language, I think then, the markets won't nuke on that. And then without the government shutdown, these are some things that I could see lining up to give us a continuation. If not, then we know that there is a chance for the spring. Regardless, I still think both lead to the same thing. All right. With that being said, guys, keep your notifications on. I'm going to keep you guys updated. Also, if this is the first time you've ever seen one of my videos, my name is Coach JM. I am the founder of Alpha Syndicate. I'm also a crypto expert inside of Capital Club, where I host the Crypto Talk workshops. I am just trying to help as many people understand these markets as possible so they can understand the incredible opportunity crypto gives people. All right. If you're looking to understand this stuff, you want to understand the macroeconomics, the fundamentals, the technical analysis. If you want a network of people that you can work together to be able to really take advantage of these opportunities, click the link below, guys. We'll see you inside.